Hey guys, my name is Joseph Graff, and today I'm going to be talking about the 6 things that you need to do before you start investing in individual stocks. So, investing in the stock market is a lot of fun, and it can be very rewarding if you do it correctly and take the time to prepare yourself for it. However, if you invest at the wrong time or invest in the wrong way, it can have some very negative impacts. So this video today will hopefully help you to avoid those pitfalls. So the first thing that you want to do before you begin investing in the stock market is pay off any high interest debt. Now, when I say high interest debt, I'm mostly referring to credit card debt or payday loans if you have them. And really, the more debt you pay off, the better. Ideally, I want you investing when you don't have any debt whatsoever. But there is what I would consider good debt, such as a mortgage payment or, in some instances, a car payment. But for the most part, I don't want you all to have any high interest debt if you're going to invest in the stock market. And that's simply because you're going to be better off in the long run paying off that debt rather than trying to earn money on your investment to use that to pay for the debt. Just pay off your debt first. That's my advice. The second thing that you want to do before you start investing in stocks is build up an emergency fund. So we don't know what tomorrow might bring. And because of that, it's always good to save 3 to 6 months worth of expenses in case you lose your job, you have some kind of medical incident. Pretty much you just need to be prepared and have some cash saved ideally in a savings account, that if something was to go wrong, then you would be okay for the next 3 to 6 months. So that's what you need to do. Like I said, just save up some money, put it in a savings account, don't touch it. So after you've created your emergency fund, the next thing you need to do is you need to identify your investing goals and your investing time frame. So pretty much you need to get an idea of why you are investing, what your risk tolerance is, and what you're saving up for or what your end goal is. So I've talked a little bit about this in other videos, but an investor who's 20 years old and is saving up for their retirement is going to have much different investing strategies and ideas than someone who is, let's say, 60 and looking to retire pretty soon. The younger person can afford to take more risks, to be more aggressive with their investments, whereas the older investor, the investor closer to retirement, is probably going to want to go with safer stocks, probably going to want to weight their portfolio more heavily into the bond market, basically just be more safe overall. So that's what I want you all to do, is determine what your goals are and determine how long you have to invest. And once you do this, it'll help you greatly down the road when you're picking out stocks and other things to invest in. The next thing I want you to do before you start investing in individual stocks is pick out a few exchange-traded funds that you like. So ETFs are a great investment vehicle because they allow you to easily diversify your portfolio. So once you've started investing, I want this to be something you do for the rest of your life. I want you to be able to do it when you're busy, when you're not busy, when times are good, when times are bad. So picking out a few ETFs is good because, first of all, it helps you get diversified. And second of all, it's a very passive. The next step I want you to take before you start investing in individual stocks is find a few ETFs, which stands for exchange traded funds, that you like. So what these ETFs are a collection of stocks lumped into one fund. The reason I like ETFs so much is because it makes it very easy to diversify your portfolio, and it makes it very easy to track an index like the Standard & Poor's 500. This is a very passive approach to investing. History has shown that you can do pretty well just by investing in a Standard & Poor's 500 index fund. So the reason I wanted you to pick out a few ETFs you like, even though you want to invest in individual stocks, is that at some point in the future, you may be too busy to research individual stocks, to spend that time that it takes to find good stocks to buy. And because of that, I want you all to have something to fall back on so you can continue to invest in these ETFs even when you don't have time to pick out individual stocks. So the next thing I want you all to do before you start investing in individual stocks is do your research. So once you've found a few companies that you like their product or like their service and are thinking about investing in their company, what you need to do is you need to at least do some research into their financials. So what I would do is I would at least look at their price to earnings ratio, look at if they have any sort of dividend yield, look at their market cap. Basically, you just want to get as good of an idea as you can on what you're investing in. Read a few news articles about the company. Make sure there's not any horrible news, anything horrible going on with the company lately. Basically, I just want you all to know what you're getting into when you decide to invest in an individual stock. Now, if research isn't something that you're interested in, if you just want to take a hands-off approach, then you can just invest in ETFs. There's some pretty simple portfolios that you can create just with like an index fund of stocks and a bond fund. And you can have a pretty solid portfolio with pretty good returns just by doing that. So if you don't want to take the time to do the research, I would recommend just going with ETFs. Now, if you are willing to do the research, keep in mind that you're going to have to do a lot of research if you really want to make a lot of money. You either need to say, I'm not going to do any research, I'm just going to buy ETFs, or you need to be willing to commit hours a week into looking into these companies, making sure that they actually constitute good investments. So once you've done your research on these companies and figured out which companies you want to buy, I want you to pick out a buy point and a sell point. Now, these buy and sell points, they are completely dependent on your goals and your time frame. Maybe you cannot afford to lose 10% of your portfolio. In that case, you would just want to make sure that you sell all your stocks if they drop by 10%. On the other hand, maybe you're open to a lot of risk, and you don't really care if the company goes down a lot, and if it goes up, you're okay with that because you think it will continue to grow in the future. So maybe your buy and sell points are very far from your the price that the stock is at right now, and that's fine. You just need to have a plan going into it. The best investors, they have a hard and fast plan that they stick to, and they do not waver from that plan except in very, very extreme circumstances, and ideally not at all. So by developing a plan for when you're going to buy and sell your stocks, you're setting yourself up to be successful in the future. That being said, that's the end of today's video. I hope you all enjoyed it. If you liked the video, please hit the like button. Please leave a comment down below. Are there any steps that you think I left out? Is there any other steps that you should take before you invest in your first individual stock? Also, please subscribe to my channel. I will be continuing to come out with content weekly. I usually post 2 videos a week. So hit that subscribe button, and I will see you next time.